Is the market in correction? Is a market correction getting ready to happen? Are you in a situation where you're still buying stocks long and you're losing money trying to wish this all away? A lot of you out there are in that situation right now. The problem is that the evidence has been in front of you all of this time, letting you know what's going on in the market. Here at VectorVest, we've been around for over 30 years, and it's amazing how many of you still have never heard of us. We're going to correct that today. The market is in a state where the climate is not good. We know that inflation is a problem. We know that the Fed is going after it by way of utilizing the power of raising interest rates. And a lot of people have a lot of ideas on what the Fed is going to do going forward. And going into tomorrow, where the Fed makes its next decision, there's a lot of scuttlebutt out there on whether he's going to pause, whether he's going to continue to raise, and by how much. I think that it's built in that he's going to raise another 25 basis points. The thing is that he's adamant about getting inflation down to 2%, and right now it's at about 5%, coming off of the high of about 9%. Inflation is still an issue. But with all of this going on, is an impending correction in the works right now. Now, today, I'm not going to look at any news. We're going to use the power of the VectorVest software to let you know where we've been and where we're going, and to get you, if you're not already on the right side of the market, on the right side of the market. We're going to talk a lot about market timing. Wait a minute. There's some of you out there that don't believe in market timing. Well, the market does go through cycles, and we are trend followers. We do not predict which way the market is going to go, but we follow the trend of the market, and we keep our subscribers on the right side of the trend. And with that, you're able to protect your capital and grow it at the right times. But if we are at a level where the market is starting to go down, it's going to create great opportunities for you to buy once the time is right. Now, we're looking at an intraday graph of what we call the VVC, or the VectorVest composite. It tracks the move of over 9,000 stocks, and we feel that it is a better representation of the broad market move. And as you look at today, the market's down a lot, but this is all in anticipation of the Fed's next rate hike. So 5-minute bars, looking at the VectorVest composite, tracking the move of over 9,000 stocks. Intraday, it doesn't look pretty. Well, let's move this from a 1-month graph, or from an intraday graph, to a 3-month graph. Here we are still looking at the VectorVest composite over the last 3 months, and there's a lot of volatility in the market, up and down and up and down and all over the place. Big down day today, breaking through current levels of support. With that being said, the market is showing more signs to the downside as of today. Now, if you follow the channel on our live streams, we've been talking a lot that the market's got some more downside, and that it's going to get worse before it gets better. Because as the interest rates are being raised, it is a laggard indicator, and the Fed's at a point where it's going to have to start looking to see if what they're doing is affecting inflation and in the right way. Well, the Fed is hawkish, and he's going to continue to raise rates no matter what you think he should do. We can't control what the Fed's going to do, but we can actually, by way of looking at what's going on, keep our mindset on the right side of the market. Now, interesting, as this market has been rising, and I've been calling this irrational exuberance. Nothing has changed in the market with the exception of inflation coming down, but it's still high. If you look at it, and we're going to look at it in a moment, here's a level on the VectorVest composite sitting at $57.13. These levels of support and resistance are automatically drawn for you when you want them in the VectorVest system. We weren't able to get past this level. There's Fibonacci levels, as a matter of fact, as well. There's a lot of things that are going on. But by the power of the VectorVest software, from a level of resistance, we haven't been able to break through that. And we're still steadily moving down from this level of resistance of 57.13 further down. And this is in the last week 2 big down days. Now, have we responded and gone back up? Absolutely. But as of yesterday, see the big wick on yesterday's candle? There was a lot of give back on that candle, and we ended up with a little bit of a doji indecision and now followed through with a big down day and breaking through a level of support at 55.65. Now, a lot of you are out there going, well, you're just telling us about that now. Okay, slow down a little bit. We have market timing calls, depending on how you invest in the market, a call to fit every investor. I'm looking at right now the confirmed calls. If I look down at the bottom, I have that highlighted, confirmed calls. It is the slowest, most conservative market timing call we have. The last call we gave, all right, was on 2/21 of 2023. Did we have some run-ups since then? Absolutely. But for the slowest, most conservative investor in the market, was that a good call? We're still lower than we were once we issued that call. So it's not about we're just talking about it now. As a subscriber, you were already aware of what's going on. Well, let's say you're a little bit more prudent. Let's change it from a confirmed call to the DEW. It's a technical timing signal. It will issue more calls, as you can see here. One call on the confirmed call, but 1, 2, 3, 4 calls on the DEW. It will generate more calls. The most recent call was done a couple of days ago, and look at that, no follow through, and we got a down day today. Here is a down call that was given. Here's an up call that was given. So it does a really good job from a prudent investor to get you in and out of the market at the right times. And the third most popular call we have is the primary wave. It will issue a lot more calls, but it is a more aggressive timing call. The most recent call it gave was on 4/24 of 2023, a down call. And man, that was a good call for the people who are a little bit more aggressive in the market. So again, for those of you who've never heard of us, we've been doing this for over 30 years, keeping our subscribers on the right side of the market, not predicting where the market is going to go, but following the trends of the market. All right, let's take this a step further. Let's look at the 30,000-foot view of the market, and we're going to now go and put up a exchange from a stock graph to a market climate graph. This is looking at the important things that the Fed is looking at as well. I have this on a 1-year graph. Here's inflation. Inflation up to 9%. Then the Fed started raising interest rates, which is denoted by the T-notes, all right, raising up interest rates to go out or combat CPI. Inflation is down to right now about 5%. But I want to show you something else. Let's go put this on a 10-year graph. We're still historically high on inflation. Look at this, 10 years, 5%, still high. That's not good for the market. Interest rates have been rising. We also look at the 50-day moving average of the earnings per share of the S&P 500. Let me talk to you a little bit about that. So companies have been still meeting or exceeding earnings, but they are guiding lower, number one. Number two, they're doing a lot of buybacks to make the stock look good, number two. Number three, these companies, in order to make the bottom line look better, are doing a lot of layoffs. So now we're looking at what's going on in the economy, rising inflation, rising interest rates, or actually falling inflation now, and rising interest rates. But now you add to the equation people getting laid off. Whoa, that doesn't feel good for the market. Now, if people get laid off, they're taking money out of where? Out of the market, driving the market's prices lower. What else is driving the market's prices lower? Well, companies are guiding lower after they report earnings, driving the market lower. Wait a minute. Put all of these things together, what you're looking at on this screen matches up to what's going on in the current market's economy, and that we do have an impending correction going on in the market. Now, the next question is, well, how deep is it going to be and for how long? That I cannot answer because I can't speak for the Fed, and the Fed may do something different than what I'm saying right now. What if the Fed actually at one point in time rips off the Band-Aid and raises interest rates by 100 basis points? Whoo! Well, that's probably not going to happen. The time for that is past. Should have done that earlier. That's my opinion. Should have done that earlier. Instead, we're going death by 1,000 paper cuts along the way. But when I look at what's going on from an inflation standpoint, it's still high over the last 10 years. And then we have an indicator only found in the VectorVest software called the earnings trend indicator, or ETI, which takes all of this information, puts it on a scale between 0 and 2, below 1, bad, above 1, good. Plain and simple. Where's that indicator right now? It's sitting at ETI at 1.01. It gets updated once a week. And once it falls below the value of 1, we will be in a bona fide bear market. Wait a minute. Aren't we already in the bear market? We've got a lot of bear runs in the current market, but until that earnings trend indicator goes below the value of 1, we are not in a bona fide bear market, but we're very, very close. All right, so that's the 30,000-foot view of what's going on in the market. Put those two things together, looking at a one-day graph, looking at a 3-month graph along with our market timing signals, looking at the 30,000-foot view of what's going on in the market, and knowing that the Fed is hawkish. Let's talk about some other things. What if the Fed does decide to pause? A lot of people out there are saying he's raised interest rates at the fastest level recorded in the last 40 years or so. And that's why we're going down. Well, what if he pauses right now? Do you think that the current market condition changes enough that it's going to spur on a rally? Well, probably not. Now, that adds to the whole idea of how long this will happen. And again, I don't know how long this will happen, but it is coming. You guys need to be prepared about what's going on. The economic information is the economic information. You can't change it. I can't change it. But it's there, and you need to see the telltale signs. If you're on the wrong side of the market and you're losing money at some point in time, folks, you've got to say enough is enough and prepare to protect your assets. That's what it's all about when it comes down to investing in the stock market, protecting your assets. So what can you do? After all of this information, what can you do going forward? If we go to the Unisearch tool, we have in here called ETFs, and we can look at buying contra ETFs. Let's go stream this. Buying contra ETFs is a good way to play the market to the downside without having to buy stocks long. We can run the search as of right now, 5-2, and as we run it, we look at the stocks that are moving up the most as they take advantage of the downside. That's not a bad way to make some money, as you can see right here. I know my big head's in the way, but these are really starting to rock and roll. These are things to look at. What else can you do? You can think about it from an options perspective, selling covered calls. You can look at buying puts. There's a lot of ways to protect, but you've got to own up to what's going on in the market and stop trying to wish it all away. And I think a lot of us out there are trying to do that, but it ain't going to happen. So why not set yourself up for success instead of preparing for failure? This is a good time. And as I spoke about this as well, as the market decides that it does want to go in whichever direction it wants to go, I think it's got more downside right now. It will present yourself with an excellent opportunity to bottom fish. But we'll talk about that when we get close to that. Our indicators are just letting us know that the market's not in a prime position to go up for an extended amount of time, that we are probably in for a correction. And with that being said, protect your assets and, set lines in the sand on stocks that you are losing money on and prepare yourself for the right side of the market. If you're interested in getting more information on what we do, you can take a 99-cent trial. Go to www.vectorvest.com and /YT. 99 cents gets you access to the software for 30 days. You can look at and verify everything that I've talked about. And our market timing signal, like the confirm call, has never missed being part of a major turn in the market. I challenge you to go get the software for 99 cents and take a look at that. Folks, this video is over. And until the next time, see ya.